This is kind of a big overview of the statement of cash flows concepts for this chapter 21. So I wanted to start with a simple example. So all I've got here is I've got a beginning column for this company, and it's first year because you can see all the starting numbers are 0, and here's the end of the first period. Here's all the ending balances for that first period. So it was a very basic company. Okay, we issued some stock that gave us some cash. We bought some land. We bought some inventory. We bought some inventory on credit. We sold whatever, and there's our cost of goods sold. So that's all we want to deal with. So what I want you to think about or look at with me for just a second is the 3 basic categories of statement of cash flows that you will remember from your earlier classes. And those are operating, investing, and financing. I find that students always remember those 3 categories, which is good. So something you may not have noticed before is that those 3 categories, operating, investing, and financing, basically come from, can be tied back to, sections of the balance sheet. So if we were to start up here and look at inventory especially, well, and cash too, those are current assets. And down here in our liability section, we have accounts payable, which is a current asset. And those are operating accounts. Those are accounts associated with the day-to-day operations of our business. The cash, the inventory, receivables, any prepaid, any current asset or current liability would be an account that deals with our operations. So when it comes time to do the statement of cash flows and we think about operating activities, those operating activities involve the accounts from the balance sheet that are operating accounts, so current assets and current liabilities. If we think about land and all the other long-term asset accounts, those are where our investing activities take place. Okay, so we've invested in land, we invest in productive equipment, we might invest in investments in other companies. So that's where we look for on our statement of cash flows, the investing activities. It's going to reflect things that happen in the long-term assets. Okay, so that's an interesting little observation if you haven't made it before. Anytime you're looking at a statement of cash flows, it's dealing with changes in the long-term assets. Okay, in my very simple example, we just have land. All right, and so then when I get down here to my common stock, this is from the equity section, right, of the balance sheet, which we've studied over and over again this semester. The common stock represents the financing activities. Now, in addition to common stock, any long-term debt would also be a financing activity. I just don't have any in my very simple example. So financing activities would be what we would look to in that 3rd section of the statement of cash flows that have to do with monies brought in by owners, investors, or creditors into the company, and those transactions with those investors or creditors. Retained earnings, you know, it's part of the equity that we're going to see through our examples in working with the statement of cash flows that it never really shows up in the statement of cash flows as retained earnings. Instead, what happens are the sales and the cost of goods sold, and all the income items show up. And you know where they're going to show up. They're going to show up mostly in the operating activities. We'll have some things where we're going to have to move them into different categories, primarily in investing, but here we go. So we've got operating, investing, and financing.